Rajiv, you asked me to talk about post-COVID investing. And for me, it still goes back to that. If you own assets, you're going to be fine, and sort of keeping me from shorting trades and shorting hard assets on the screen, because I want to play post-COVID investing from the long side. And the reason is because I gave up a long time ago of reading the newspaper and reading books and reading the real-time news and deciding what my view of the world is and putting on trades based on that, and then hoping that the world comes around to agree with my view. I've abandoned that type of trading a long time ago. What I do is I look at the markets and I look and see what's performing, and I figure out what's trending from the bottom left to the top right of my screen, and I figure out how to exploit things that are trading in that direction. And if you go to the next slide, Rajiv, I've got the performance of, basically the top performance about what's gone up since the March lockdown lows. Now, as you can see, bank technology have been out in the front in the equity index regime. That speaks to, the obviously necessary need for everything tech when everyone is locked down, and very little need for anything else. So these are big givebacks off the highs. FANG was up a lot more than that, and it's backed off. NASDAQ was up a little bit more, and it's backed off. But it's indicative of what's going on under the hood in equities, if you will. Then I look at sort of in commodity macro space in orange there. Bitcoin, even at 30,000, is up 500% since the lockdown lows. So that's something that we should pay attention to. Obviously, oil is the other next big mover there, coming out of a trough. I think it was priced to about $20 at the bottom of the lockdown, up 250%. But this sort of tells the story to me about the sectors of the economy, the sectors of the macro world that we should be pursuing. Copper, silver, Bloomberg Commodities Index, Bloomberg Commodities Grain Sub-Index up 50%. Gold doing poorly, up 60%. Maybe that's not the best inflation hedge. The dollar index down 9% from 99 to 91 or so in a big retracement rally now. But I think that as we come out with more headlines about stimulus and endless accommodation, I think we'll get the dollar to turn back south again. When I look at the sectors of the markets that have performed the best, you've got solar, which is massively off its highs, still up 200%. Metals and mining, home builders, energy, transports, materials, consumer discretionary, and then financials and gold miners. Actually, I flipped those by accident. Consumer discretionary should be at the bottom. Financials and gold miners have still been performing. So this is how I take a look at the world and say, okay, this is what's going on since the lockdown. Let me see what I want to be in and start charting these sectors.